some of the worries about interest rates, inflation. If you look at the manufacturing goods coming out of China, numbers not great.
Unless you've been on Mars, you will have noticed the extreme volatility of the markets over the past 14 days. Let's talk about the fear index. Is that an indicator for cryptos?
The table isn't regulated, the laptop's not regulated. We don't regulate Excel spreadsheets, but at the moment we're regulating blockchain technology.
Welcome to Talking Markets, sponsored by Capital.com. I'm Michael Wilson, and I'm joined as ever by my former colleague and present friend for a long, long time, David Buick.
Present friend? He's about to be excommunicated.
And joined by Jonny Fry, who's CEO of TeamBlockchain, amongst other things. You've got a long pedigree in the city, but at the moment, that's where you are. But let's talk about the fear index. Right. Now, there are various ones of these. I know the VIX, you know others as well. Yep. Now, again, is that an indicator for cryptos?
Yeah, well, okay, so let's step back. The fear index is basically a way to gauge, measure, take a temperature of what do the professionals do? Are they really confident or are they worried? Hence, fear index. If they're really worried in the fear index, they're frightened. But it's used to actually price options. So that's how the fear index, the VIX, is the sort of, to give its proper term. And what they've done, they've in the crypto market, they've used a similar sort of thing to gauge, if you like, the level of uncertainty, concern, worry, fear in the market. And so you're looking at, as of close of play last night, the crypto fear index is standing around about sort of 29, with sort of 0 being, extremity, I'm really, really worried, and you've probably by then cashed everything you got in, and the other extreme is 100, and you just think crypto is going to double and triple perhaps every day almost. So two very, very extremes. So at the moment we're in this sort of area where people are nervous and concerned, and I think that goes back to my initial point, risk off. People are saying, oh, hang on, some of the things that are happening in the economy, some of the uncertainty, some of the geopolitical tensions, some of the worries about interest rates, inflation. If you look at the manufacturing goods coming out of China, the numbers not great. They've actually fallen, which that's important because China accounts for 28% of the manufacturing in the world. So if China isn't exporting, it means we're not importing, which means we're worried about the markets and the general economy. So there's a lot of uncertainty, I think, at the moment.
Can I just develop a variation on a theme a little bit if we can, because we talk these meme coins, traditional coins, and altcoins. And a comment that you made to me recently was that your concern was that a number of people are not doing their research properly. And research in regard to being successful in trading cryptos is essential?
Totally. And again, I apologize for repeating it, but for me, it's just having been in the markets like the two of you for a number of years, having employed people to run smaller company funds, having run a publicly quoted smaller company myself and floated on the London stock market and run it, I know how basic institutions aren't interested. They don't buy smaller companies. What they do, they asset allocate to smaller company funds because smaller companies are illiquid. You can't buy and sell very much. No. They're very volatile because they're illiquid typically. And they're under-researched. So come to your point in terms of the research. So if the viewers actually want to go and Google VIX, for example, okay, which is, say, used by the option traders and for billions, trillions of value of assets, and if you Google it, it'll say in the last year the actual volatility of that index has reached a high of, I think, 65 as a number. And you think, okay, so what? If you then look at the chart on Google of VIX, the highest it's got to in the last year is 35. well, hang on, they both can't be right. They're on the same page.
Yeah.
They both can't be right. Now that's a good example why you wouldn't ever take one bit of information. You would then
as gospel.
You'd go and double check. Is Google right? Well, how come they've got two figures for what should be the same number? And I think that's a really good example of something that's very current right now that the listeners can go and actually go and look at and see for themselves. So my point is that you're absolutely right. You've got to do your own research, or you've got to find a portal where they've got research that's credible, that's verified.
And my only final statement is that I cannot recommend enough TeamBlockchain.net and Digital Bytes as a weekly.
That's your Christmas taken
It
care of.
is, absolutely.
It sends you to sleep every week, doesn't it, David?
Well, I get to paragraph 3.
Jonny, thanks very much indeed.
Thank
Great,
you,
great
Bless
pleasure
you,
to
no,
have you.
really great.
And that's the end of this particular podcast, Talking Markets, brought to you by Capital.com. See you again soon, I hope. And you can listen to the full version of that podcast wherever you get your podcasts from.